first place, the global cues will read the US data as negative. Actually, the jobs data was excellent, 280,000. But since the markets have been very worried about the rise in bond yields, probably this morning the Kospi and other Asian markets are showing that negative tick because US yields went all the way to 2.4%. Now, any rise in these yields has so far been interpreted, has so far led to a little bit of money being moved away from emerging markets. So there is that fear, and then the Greek debt hasn't quite been rolled over. So it's a niggling worry. At times like this, global investors are not very big investors in risky assets. So, you might find that risk aversion continuing. After all, the data we have, even in terms of the way FIs have participated in our country, has not been very good. We've got, now I think from counting May and June, it's about $2 billion of shares sold, and every day of last week we had this 500 crore, 600 crore of FII outflows. So that the US jobs data is fundamentally will be seen immediately as a temporary negative, though in the longer run a better US economy is good for everybody. This at the moment it is being seen as a little negative since bond markets are playing a very big role on FII psyche. And finally, of course, the way Indian markets panned out last week, some 3.5% to 4% down, depending on which index you're looking at, and Bank Nifty is down over 6% last week. I mean, if you can look up the delivery statistics, and I think Varinder will detail them to us later. Big selling in ICICI and Axis, in addition to Tata Motors, but very big selling in those stocks. So we will have to see whether that selling has abated. And whether we can, chart out a new course. I think that 8,050 mark is going to be important. We have supported that, we've come back from that 8,050 mark so many times that today as well, if we do that once again, there could be buying at those levels. I'm pinning my hopes on that.
Well, absolutely. That's the sense that I get after speaking to a lot of traders as well. So if you just look at the numbers, there was 550 crores of selling in the cash market on Friday. There was a selling of almost 500 crores in index futures as well. And there was quite a bit of shorting in the Bank Nifty. That's why you saw such a deep cut over there. And just to put the numbers in front of you, ICICI Bank saw delivery-based selling of almost 400 crores. And Tata Motors, 350 crores of delivery-based selling. That stock has something going wrong for it. I mean, it's down from the 600 rupee levels. Of course, Axis Bank as well. But apart from all of that, if you look at what's happening within the F&O space itself, the 8,050 put has shared about 10 lakh shares in open interest. So indicates that the downside risk perhaps is opening up for the market. And even at that 8,050 level, the bulls are losing a bit of confidence. So all of the data this week suggests, at least that at the start of the week, there could be a bit of pressure on the downside. But here's what you'll get to see on the show this